What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 7th of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to go about trying to answer a key question on the minds of many people in the crypto market. Over the last week or so, we've seen a significant rebound in Bitcoin's price, and the rest of the crypto market following as well. The question remains whether or not, though, this is the official rebound. Have we seen peak fear in the market, and are we on a trajectory here to start seeing price not only recover to the previous all-time highs, but also set out to make new all-time highs and revisit or visit for the first time six-digit territory above 100K for Bitcoin? I want to spend some time to talk about 4 key metrics we can keep an eye on that can help us to gauge whether or not this is the case or not. So if you guys enjoyed this video, consider dropping a like, subscribing, leave a comment down below, and if you haven't already, hit that bell icon so you don't miss another upload here on the channel. I digress though, guys. Let's go ahead and dive straight into the analysis. So this is a big question to try to answer here, but I think there's a pretty simple overarching topic or focus point that I really want to drive in here. It's something we talk about a lot here on the channel, and that is the concept of inflows versus outflows. Market price of any asset, whether you're talking about Bitcoin, your favorite altcoin, or stocks like Apple or commodities like gold or silver, they are all determined by one key thing: whether or not there are more buyers coming into the market or more sellers. And there's 2 ways this can go about happening: either market order flow, where people are saying, I want to buy Bitcoin at whatever is the best price right now on an exchange, or vice versa, I want to sell Bitcoin at whatever price is best available on the exchange. Or we have to consider as well order book flow, right? So we're going to dive more and more into this here on the channel as we go throughout the coming days and weeks. But there are some different key metrics we can utilize in a very simple nature through charts and data points that we have access to that can start to demonstrate this. The first one I want to talk about here is the concept of higher lows and higher highs. So we've got our long-term chart here for Bitcoin, and we can see here on the long-term time frame a very clear set of signs that we're still in a bull market, right? So we can see here, for example, that as we go throughout these rallies in price, we generally have higher relative highs, right? Compared to where we were in the past, we have higher lows, higher highs, higher lows, higher highs, higher lows. No matter how dramatic the rallies might be and the corrections might be coming back, we find this common pattern. It is indicative of an uptrend that we have higher lows and higher highs to showcase that people are willing to pay a higher premium each rally, and also that they're buying at a higher premium when it's coming down at a discount. And we can see that even though here we've had some shaky times in the crypto markets, we've been setting in slightly higher highs and slightly higher lows here over the past year and a half. So this is already a key sign here. And another thing that we want to see, obviously, is that we're going to set a new higher highs here, or new all-time highs in price for Bitcoin, and possibly even set in a low that's nowhere near this range, indicative of the fact that people are not waiting around for another 50% correction. In fact, they're coming to buy, and they believe the third time's the charm, and that Bitcoin is really going to start to charter higher in price. That would be the first thing we'd want to see here to show confidence around Bitcoin as an asset. But we don't want to just analyze Bitcoin here. There's all types of other things that will showcase to us whether or not the market is generally confident, and therefore whether or not Bitcoin is going to charter above its previous all-time highs. One of them is Ethereum. Now, we've been writing about Ethereum for a long time here on the DataDash channel and focusing on the ETH-BTC ratio. And what's really interesting to see here, I'm going to go ahead and turn off the drawings here all the while that's thesis still stands true here. I want to go ahead and just analyze here as we take a look maybe at the 3-day chart. We can see here, we go in the standard chart, that Ethereum has consecutively been setting in higher lows here. Now, to be fair, we've had some anomalies here where we didn't have higher highs, right? For example, the high range was generally around the same as here in September as it was back in May, but we did push towards a higher point in the ratio here. If we are in a bull market, we should be seeing altcoins, even large ones, or the second largest crypto like Ethereum, still outpacing Bitcoin for the most part. It is indicative of people taking in more risk into the market, buying at a premium comparative to Bitcoin, right? As Ethereum is rising higher and outpacing Bitcoin, this is a sign of optimism in the market and risk-taking. Again, put aside fundamentals, I love Ethereum. I don't think it's a per se risky play, but it's definitely a little bit more risky than a safe haven or store value asset like Bitcoin, right? An asset that's much more neutral in its use cases, whereas Ethereum's got DeFi, the metaverse, NFTs, everything you name under the sun that you can utilize with smart contracts and decentralized applications. So we're seeing here again, higher lows here, right? As much as people are panicking about the recent sell-off in Ethereum, there are buyers coming in here. This is exactly what we want to see here. And again, I think the thing that's important to understand is, again, it's not a matter of whether or not you're a supporter of these networks or these chains. And I'm not saying you have to go and invest in Ethereum, but case in point, this is showcasing that people are getting optimistic. We're getting these dramatic sell-offs that are followed by very swift rebounds here, multiple upper single-digit days where we're up 3, 5, 7%. Price, we're really starting to see markets rebound here and make up for a lot of those dramatic, usually leverage trading liquidation type of losses in the market, the sell side pressure that comes from people getting margin calls and therefore liquidations. Okay. So we want to continue to see this rebound in price for Ethereum, getting back up to this high range, potentially setting in a new relative high, which may be, again, as we talked about, the third time being the charm, where we could really start to see a breakout higher past this general kind of ascending resistance range. The third thing I want to talk about here is it's not only enough to take a look at whether or not Ethereum is outpacing Bitcoin. We want to go a level even deeper than that. We want to start to see whether or not the kind of hyperbolic, speculative areas of the altcoin market are starting to outpace even Ethereum, not just Bitcoin. We want to go deeper than we were going before. We want to see whether or not the speculative sectors are leading the market. They're beating not only Bitcoin, but they're beating Ethereum, right? Because that's, again, another sign here, whether or not the market is up for more risk taking. If we were in a bear market, or if this was just a dead cat bounce, we should start to see here that the altcoin sector is starting to showcase weakness. Those hyper speculative sectors are going to be the first sign to show whether or not we're in a bear market, right? Now, I'm not just talking about a small dip like we've had here, right? We've seen, for example, since back here in November, of course, we had a 46% correction against Ethereum, but look what it's being followed by, right? We're seeing higher lows and higher highs pressing up again against this point that might serve as resistance. Again, I'm not here to say that this is an overtly, absolutely bullish chart, but it's also not a dramatically bearish one. If we started to see price action like this, where we are going down and continuously setting in lower highs, lower lows, the vast majority of candles being red, then that would be a cause for concern, a real breakaway from the trend. But so far, we're holding around this neutral line here, a point in which we were at throughout most of the bull market. If we can get back above here and turn this into support again, and also continue to set those higher lows and higher highs, which tend to come in conjunction in this kind of technical setup, then we can be rest assured that it's likely that this is the rebound in the market, that optimism's coming back in, okay? So I'm using the metaverse as an example. This is the metaverse index. It's one of the DeFi indexes that you can utilize to get exposure to the broad range of metaverse plays. But I digress. The major point here is that you can utilize a whole range of different indices in order to gauge whether or not the market is outpacing Ethereum, these more speculative sectors. It could be your alternative layer 1 protocols like Solana and Avalanche. It could be the metaverse. It could be, like even DeFi indexes, right? So again, that's the major point that I want to drive here. Are the other speculative sectors outpacing Ethereum? Another thing as well that a lot of people don't gauge or look at most of the time is the publicly traded equities, the stocks for companies that are tied towards cryptocurrency activities, usually around mining. So we have companies, for example, like Hut 8 Mining Corp. You've got Riot Blockchain. There's a lot of these publicly traded companies that do kind of serve as a vehicle for traditional investors through brokerage accounts and through various different types of hedge funds and investment funds to gain exposure to the cryptocurrency space in an indirect way. So how would I go about explaining this, or why is this the case? Well, because a lot of these companies are usually doing mining operations. They're investing into the hardware in order to go out and mine Bitcoin. And many of them will hold it as a treasury reserve asset, or at least benefit from appreciation of price in the underlying market. Now, putting all that aside, the fundamentals of it, when we see technical confidence in the price action of the equities, this showcases again what traditional markets, at least in the equity markets, are thinking about crypto as a whole. If they're paying a higher premium for crypto stocks, it likely is a bet of confidence, if you will, that the market, the underlying crypto market, is going to appreciate as well, right? If the profit margins of these companies is determined, the dividends that they could potentially pay out, and the value of the stock is determined by the underlying asset that they're generating through mining operations, it's a sign of confidence from traditional equity markets. Well, take a look at this. Since back here in late January, when we really saw, and if we go back here, kind of the peak fear here in Bitcoin's price, we can see here that Hut Mining, for example, has been continuing to set higher lows and higher highs. It's been rebounding here, making up for a lot of these losses, taking us back to where we were in early January. And what do you know? If you take a look at the long-term chart here, we can see that we've got a nice ascending support line, again, indicative of what we've been seeing here in the market and crypto, right? Those higher lows are in price, buyers coming in, paying a premium, and we're also seeing higher highs, right? So get that moved out of the way so you guys can see that clearly. This is a clear sign of not only a great discount opportunity, right, in prices. You can see we pulled down 72%, right? Now, all the while that can seem scary to some people, and they usually think of it as a bad event. We've had this already back here, even worse off from February to June. We've seen this before. This has happened in the past. And of course, smart money, as you can see through the volume profile, people are buying it on the dip. Right? So the more we continue to see these higher lows and higher highs, and I'm not sitting here and saying you have to go buy Hut stock. My point in case is that this is a sign that the markets are growing confident once more. That the inflows are starting to outpace the outflows. All the bears, all the sellers, they're out, they're flushed out, they're out of the market. Sell side pressure has waned, and now buyers are taking back control. They're dictating the trend. And so long as you've got higher lows and higher highs, the bulls are in the lead. That's the key thing to remember. Now, the last thing we're going to be taking a look at here to wrap up this topic, guys, outside of taking a look at equities, is to take a look at the fourth metric I want to share. And that is the GBTC discount or premium to net assets under value. Okay? So, what is this indicator here? This is a metric that is taking the publicly traded exchange-traded note product, Grayscale's Bitcoin Trust, right? Which is basically, if you will, a very simplified way for people with brokerage accounts in traditional equity markets to be able to gauge exposure, get exposure to Bitcoin as an asset, real Bitcoin holdings. Now, all the while there are some differences with this between an ETF. What really is cool about Grayscale's ETN product is that they're actual Bitcoin backing each share. Now, we used to see that people paid a premium for Grayscale's GBTC product when there was a limited amount of supply on the market and lots of demand, and this really distinct difference or divergence between the supply available for actual GBTC shares and the demand back in 2017. We saw huge premium trading, and for the most part, we can even see here throughout 2018 and 2021 that Grayscale always traded at a premium, but it had a little bit of a dilemma. By adding a lot of new Bitcoin and therefore generating new GBTC shares, right? All the while they did actually buy real Bitcoin and back each share by this Bitcoin. There was a little too much overload in the market. And you could start to see here as well as Grayscale was adding a lot, price was starting to move higher. And when Grayscale stopped buying, we could also start to see prices turning a bit neutral here, getting a bit scared. Grayscale wasn't buying anymore. There wasn't the demand for it. And ever since then, they've been on a slow reductive program, one in which doesn't really harm price, but at the same time isn't serving as a major benefit anymore. There's not any major new demand to go out and buy new Bitcoin for these shares, and there probably won't be for a long time. It's not the case I want to make here. What I want to focus on is the negative premium that has come about over the past year, throughout most of 2021 into 2022. And it seems like there's been no sunshine and rainbows for this negative premium. What this basically means, to put this in plain English, it means that you can go out today and you can buy GBTC shares comparative to their actual Bitcoin holdings at a 27% discount than the actual market rate of the Bitcoin that they're holding. So I'll go ahead and I can visualize this here a little bit better. If we scroll up here on this page, or I think down on the page here, we can see that whereas in the past, you can see the different metrics here on the chart. You've got the actual value of the holdings and the market price people are paying for those holdings. It used to be a 77% premium back here in January 2018. Now down to where it is, where it's a 25% discount. So you can buy $35 for the Bitcoin, but the market price you're paying is only $26. pretty nice solid discount opportunity. Now, whether or not you want to go out and buy GBTC or just go out and buy actual like spot Bitcoin in the market, there are some fees it's important to understand when it comes to the GBTC product. I digress on that. The major point though is that if we see optimism coming in the market, again, more inflows than outflows, we should technically be seeing people come in and eat up this arbitrage opportunity, this opportunity to get Bitcoin at over a quarter discount in price, right? Once this premium starts to head back up, that'll start to showcase that there is actually a matching amount of demand in the market to buy up that existing GBTC supply of the issued shares of the ETN product. Just like how, again, we would start to see more demand in the underlying Bitcoin asset in the market driving up price, right? So I digress on it, guys. I've rambled on a good amount here in today's video, but all of these are some really good metrics that unfortunately people don't watch enough. They get too focused on price. And what we want to focus on here is trying to utilize as much models as we can. Data analytics, data science, we want to be able to take a look at any metrics and also take a look, if we are going to look at price at the long term, and see whether or not we're setting up those key signs of a reversal to the upside. Higher lows, higher highs, the inflows outpacing the outflows. I know I probably sound like I'm beating a dead horse at this point, but that's what dictates markets, guys. So if you enjoyed this video, consider dropping a like. I know I rambled on, so if you guys have any thoughts about my rambling, feel free to leave a comment down below as to whether or not you agree or disagree. I want to get a conversation going with you guys. Love hearing from you all, and I definitely try to take any feedback from you guys that I can here in the channel. But if you like these kind of conversations as well, you can always check out the Dash report down below in the description where we do deep dives like this going into the markets. But I digress. I hope you all have a wonderful rest of your day. Thank you all for joining today and giving me some time out of your day. And I'll see you all in the next video. Take care, everyone.